Good morning, everyone. I don't know about any of you, but this market is, I can't say I had never seen such thing, but maybe it's out of memory. But I honestly was very surprised when we were in the coaching session last night. I mean, I had to look three times, after Netflix reported and Amex reported, and both down the way they were. And the futures were up, and I'm like, I can't remember if I ever seen such a thing, a negative reaction in the broader markets. Hey, Joan, yes, the session's recorded. I have to download it out of the Zoom recorder and send and put it out for everybody. Yeah, I'll get to that probably later today or over the weekend at the latest. Good morning, LaDon. How are you feeling today? Was a little rough there with that wacko move, but awesome. Maybe you had 2 root beers after yesterday. 3. Okay. Well, let's see where things are at here. So you see my red lines there on the Dow futures. And so that's what I set up after the decline and things started to turn around. And so I had my 2 reference points. And, as I like to do, I point out the fact that those reference points were, you see with the reactions to them. And that's without the trend lines and without the fib lines and without channels and, envelopes and Bollinger Bands and all of that other mumbo jumbo. So here was the initial reaction to this resistance to the left. And lo and behold, when it tried to roll over, and I believe at that time we did put on a bear call spread, and it didn't work, obviously. And there was some gap downs, and the market did its jiggles, and those were the signs that, hey, this market is communicating that buyers are stepping up. We really don't care about Washington. We don't care about trade wars. We don't care about anything. Market's going to go up, whatever. And so it took in the sellers there and the shorts that did so at that reference point. It didn't work. So they buy the cover, and now it looks like it's headed up toward the next reference point. And prices move between reference points. Sometimes things like a 50 MA or a 200 MA come into play as self-fulfilling prophecies because so many are using them. Okay, so the way this looks now, I have no other way to interpret this other than it's going up to the next reference point. And the next reference point is in alignment with the 200 MA. And theoretically, is based on, as this is viewed, the 200 MA is going to be a stronger resistance point than the 50 MA. They're both used by institutions, hedge funds, whatever, as a point on the chart to determine the trend, which I don't agree with. They got nothing to do with the trend, or support and resistance. So unless by some, whatever happens today, who knows? So far, the news is positive. Trade tensions kind of seem to be going away. The thing in Washington, nobody seems to care about. It's like, the children are arguing, whatever, nothing big going on there. And it should go up into this area here. So we have to be thinking long from the point of view, and I guess on a short-term basis, where personally, I can't put on swing trades unless I find something that maybe is starting to come out of a bottoming pattern. But today's Friday. So unless today completely fails and closes down here, the assumption is it's going up there. So we'll see how the day progresses. And we shall see. Yeah, and Tesla, I want to take a look at that because obviously I heard something in the news about that. Oh, shit. Excuse my language. It's down 25 points there. So obviously the news wasn't so hot. So Tesla's down 25 points. Netflix has recovered. Last night after the close, it was down to 336. Now it's at 349. You can see where it was last night. So it's bounced up. Now it's up into some resistance there. Amazon's up, Apple's up, Bank's up a little bit. I don't know what this is, NSL. AMD, I like this. I think I'm going to buy this today. Again, the market being whatever. I like the bottoming pattern. Semiconductors did well yesterday. NVIDIA's up. And that turned around from this negative reversal, but I don't know if it's out of the woods yet. Square is probably good for at least intraday trades. Had a great day yesterday. Dan had pointed that out early in the day, and so on. I'll look at SLB. I guess that reported. That's coming back to life. So, positives out there. So let's see where the NASDAQ futures are at. And they're quite a bit closer to that reference point. So when I look at these markets, one of the things that we have to consider is when we look at the Dow, let's go back to that. We look at the Dow and say, well, this should go up there. And sometimes the Dow will go up or go down or whatever it's going to do by itself. But you have to consider other markets. So when this hits this area, well, what if it starts to turn down sharply? Well, then odds are the Dow isn't going to hit the reference point that we have up there unless it can go by itself. So, we always take into consideration other markets and how they might affect each other. S&Ps, similar to the Dow. But notice the 200 is way up above here where the Dow it's closer. And I'm just eyeballing that. I'm not measuring it, but you can see it's pretty close, just above the top of those topping tails. And where this is well above, it's up all the way up near this high up there. So we'll see when it hits this reference point. If by chance today accelerates up into there, you'll want to keep an eye or an alert up there, and we'll relate that to the spiders. Let's just take a look. Looks pretty different, right? It's at the 50. And well, that's up today. Yesterday got through the 50, closed above. So I'm looking at this and thinking to myself, okay, so the futures are starting to lead a little bit more aggressively than the spiders. Maybe that is a signal or a little clue as to sentiment beginning to change to the bullish side. And we did see that yesterday. And that's been kind of the fly in the ointment to the bear case as far as a reversal down. So yesterday into the close, we saw a pickup in call buying that we hadn't seen since this little pullback right here. So this is the closing put call ratio. And it didn't close at, well, close enough, 0.815. But that was the most call buying into the close that we had seen, and that into earnings being reported. So, traders getting a little bit more confident, more bullish there. And we do need to see that historically to get the markets to form a reversal. And this moving average of sentiment that may not get to 0.80, but if it just hits this lower band, that's going to be enough to give us a signal. It doesn't have to get to 0.80, Dan, right? The moving average. And that's why I created these bands, because in a bearish market environment, it'll hit the bands and won't get up there. So that's the purpose of why these bands or envelopes are there. So in a more bearish market, the bands, they begin to creep lower and give you signals at lower levels than 0.80. Okay. All right. So let's move this out of the way. We'll be keeping an eye on that. And Qs, pushing up 164.50. So we're getting up into this unfilled gap. You got to know your reference points, right? You got to know where those reference points are, where others are looking at. We'll see the reaction. Russell is up. Everything's going up. and this has a void actually. Let's see what that is, give or take 174-ish. So it's not quite there. I'd keep an eye on that or set an alert at that 174 area. Markets do pop up in there. And of course, you want to keep an eye on the NYSE tick. So what we do is, and using a market internal with the technicals is that, so let's assume that prices run up here this morning, maybe into the 10 o'clock reversal period or 10:30, and you see the NYSE tick get, plus 1,000, plus 1,100, 1,200, whatever it is. You just set an alert at plus 1,000. And then when that goes off, you see maybe the Russell is at your reference point, or the Qs or the Dow, whatever. And you know that if you got longs on, you'd probably be smart thing to start thinning off a few, or watching for a breakout bar failure, some signal that sellers are taking control. Transport's doing well, and JB Hunt reported it was up like 6 points after the close yesterday. So that was really popping. So that was a big help for the transports. And oil just holding up here, right? So oil bullish buyers just stepping up saying, we don't care. It's at this resistance point here, and we're willing to continue to buy. And that suggests it's going to go up. We'll see if it actually breaks out. And gold, maybe this is another, sentiment piece of information, meaning, why is gold going up? There was the holidays, so maybe demand for gold for holidays, but it's usually, there's inflation coming. So maybe the rhetoric, Trump saying, the Fed can't raise interest rates, but which turned out probably to be the right thing to say. Not that he's an economist, but with all this concern about the yield curve narrowing and an inverted yield curve in a recession, why are you going to keep raising short-term interest rates? So maybe that rhetoric. But anyway, here where gold was holding up, maybe as a hedge against the markets, now gold begins to break down. We see call buying starting to pick up, prices moving up into resistance. And then, with all of this, positive price action, let's put it in the perspective of what happened at the end of last year. This thing is in a downtrend. So if you're looking at this picture on any time frame, you're sitting there waiting for the reversal to sell it short. So, and I am. And I honestly, for those of you in the room, I wasn't expecting a move to this extent. We did try a few shorts. They didn't work out, but that's the market. As it got to those reference points, we step aside and we wait to see what happens. You want to take a look at the euro, which is a different symbol from TradeStation. Trying to bottom out here. This is a weekly chart of the euro here. Down this week, topping tail, bottoming kind of a pattern where you can see, nasty collapse. The next break, slowing momentum, tries to rally. Next break, new low, slowing momentum. And so when we look at this, right, Alex, how I love to show why you don't need indicators. We always have our little jokes about that, right? So there's a momentum move. And then it makes a new low, but only a slight new low. And then up, and then a new low and a slight new low. So kind of a lopsided head and shoulders bottom here. And those of you that are into the indicators or being led down the wrong path by someone else about the need of indicators, right? Which is, here's their bearish divergence kind of BS, if you will. So if you just look at the distance between the lows, right, and you see it slowing, and then you get your bottoming tail bar, and then like this, your price action, here, you know that momentum to the downside is slowing, but it's a bottoming process. So far, it hasn't been able to really pick up. So that's your weekly chart analysis. And going to the daily chart, that's the quarterly chart. Daily chart, you see deep pullback toward major support, trying to hold here. Maybe it's a spot to consider some with a bigger stop if you're bullish on the euro. So we'll see.
Hey, Greg, Frank has a good question for you.
Yeah.
How confident are you we're going to get the bear market? Because my quick answer is because of the depth of the retracement, my confidence gets lower and lower.
Well, when he says get the bear market, you're already in a bear market.
Well, we're in a downtrend. We aren't, 20% down bear market.
Yes, markets have gone down 20% from the high to the low. But who cares? Who cares if it's 20%, if it's 19.5%?
No, I agree. I think he's asking in the vernacular, it's just how confident are you that, we're going to get some, really sweet, shorts for big gains and take out the prior low. I think that's what he's asking.
That's two questions. How confident am I that we're going to get a reversal? 100%. That's how the markets work. Is it going to make new lows? I don't know. I don't have a crystal ball. But this is violated. This is common sense, Frank, type of thinking. It's not about my opinion. It's common sense. It's broken the trend on the monthly time frame that's been going up for years. The weekly time frame is in a downtrend. It's coming up to resistance. Will it make new lows? Nobody knows. But depending on how far it retraces, right? So if this retraces up to here or close to that area, I would say it's unlikely that it's going to make new lows. However, if you go and look at this retracement, when this cracked, this retracement was about 80% of that decline, yet it went all the way back down. And this drop is not as severe as this one. So when you look at the charts, you just look at what is, and it's common sense stuff. And that, hey, it's in a downtrend. A downtrend is such until it's not. Black and white. So as it comes up into an area that where sellers are going to be, and they are going to be there, you see what the reaction is. We went over this last night in coaching. I drew this out with my little pens and whatever, and it's like, okay, so this is green bars up. We're expecting this to turn down. Will it be a narrow range bar here and then a red bar, or will you get a red bar that goes back down? Who knows? But what we're looking for here, what this is all about in multiple time frames, is looking for the transition here, the beginning of the rollover, whether it's wherever it is here, right, and begins to roll over, and the transition from green to red, however that's going to happen. With that being said, I'm off here, Dan. You can go over the stuff that I'm going to go over because I'm already running late. I hope you guys got a lot out of it. We went over some technical stuff here besides what the market's doing.
Yeah, no, it's all very valuable. But yeah, the biggest concept that we teach that puts this into question is the extent of the retracement right now. The deeper it gets, the stronger it is. And using multiple time frames, you keep hearing me say Groundhog Day all the time, that whenever we see a possible setup on the daily, meaning a chink in the armor that the bears might want to take control. We had this gap down, we had that gap down, we had that gap down. None of them followed through. Yesterday's gap down. So it's Groundhog Day. So even though our mindset is we're looking for the turn, and we had some false starts, like even yesterday, put on some new swing shorts on, on the gap down. So that's it. All right, yeah, a lot of talk is going to be, we're going to be watching Tesla, gap in 323. That's a very bearish gap under 1, 2, 3, 4, 5, 6, 7, 8 bars. 30-minute low. Sure, I would consider selling that at a money call spread. But I just got to wait. I need more information. And we got lucky getting out of our put spread at a profit yesterday. And again, that's why when we sell these options and spreads, we don't like gap risk. And that's why if we can get 85% of our money and eliminate remaining risk, closing our insurance policy early, we do it all the time. Some shorts, tandem here. Oh, let me give you the alert that I sent to our advisory folks this morning. Hey, Debbie. So we legged into a covered call that expires today, and it's kind of right there at the money, which is fine. And just let it play out. But into the close, I want to go out and sell a $46 call for next week. Verizon, we shorted yesterday. That breakdown, there were so many patterns that looked similar. They were, breaking down from consolidation with sell setups on the weekly. PG, CLAC. Yeah, that triggered right. Yeah, that triggered right at the open and then snapped back with the SMHs. Same thing, we sold an out of the money call spread. And because of the whip there, we gave it another dime stop. We'll see where that opens up. Disney, breaking down, sell setup weekly. We did a swing trade on that. Square, Greg mentioned, yeah, that looked great for a day trade yesterday. Let's look at some gappers, earnings. JB Hunt yesterday looked great. So it looks like, well, there was a few transports there. Slob, I kept on my list because it still has room on the weekly. So let's keep an eye on that for maybe a 30-minute high or a pullback. It still looks great. KSU earnings up $1.90 right to 106. It's right at major resistance. Nothing to do there. Gapping up 82. Wow, that's a big gap. $82, but there's nothing to do. Just visually, I don't even need to look at price. Just look at the picture. It's gapping from here way the heck up here. There's nothing to do with that. Netflix turned flat. That's quite, look, it just had a 10-point pre-market run. Trader, yeah, I'll take a look at those. Hold on, let me get through some gappers. So now with this pre-market strength, I'm not going to be so eager to want to sell my call spreads on this. But yeah, Alex, you were asking if it was gapping down here, low 340s, whatever, then yeah, that was a bearish island reversal, definitely. CAD up a little bit, that's a put spread candidate. AXP down 97.75. So it's gapping to this lows. And, the Wall Street Journal, it's funny looking at headlines. American Express blows away earnings, this and that. Now do you see why I don't care about the news? I just need to see what the stock's doing. Casa not having a good day, gapping to all-time IPO lows. Alcoa had earnings yesterday, was whipping all over the place. But if it can stabilize, put spread candidate. And, Greg and I were talking, you hear me say put spreads all the, selling options all the time. But I love directional trades. Just find me the pattern on multiple time frames, put it through our trading checklist. And my go-to on directional trades is what Pat does. It's a bull call diagonal. And Slav might be a candidate if it sets up here. So you buy a longer dated in the money call. Let's say, it depends how long you think you're going to be in the trade, but maybe buy an in the money $45 call and sell a next week out of the money call. That's a bull call diagonal. I love them. WFC was yesterday. That's a put spread candidate. Negated that gap down and bottoming tail. So a little downside shakeout. JPM under these lows. Put spread candidate. Oh, and this is what Paul was watching. Lily, which I was doing was doing so beautifully yesterday. Look at that ugly gap down. OLN, I like the downside shakeout on the weekly. It looks higher. And that's a beautiful 15-minute. I like it. Me personally, for any longs, I just want to let the market settle down here, the gap, and see what's going to happen. But I'll put that one, I'll put that in a window with you. That looks good. So that OLN is a go-to on the long side. But look at the 15-minute spiders here. Using pre-market data, they're extended. Is Square? Not really, because the weekly, I only do diagonals, John. When the longer time, let's take a look at Netflix here. When the longer time frames tell me that I have a big target and I want to be in the stock for a long time. So that's when I use that. Square pattern is just